What's going on? How y'all doing, guys? It's been a crazy day with that inflation. Let me see where we're at. What's up? I haven't been on live in a while, guys, so I'm gonna have to get used to this. SOFI today, complete manipulation, but it was not just SOFI, it was the overall market. That inflation data did come in really hot. It was pretty bad because it missed the expectation. So things like this can happen in the market. We were down 10%. And I'm telling you, the big money, they've been loading up the past 90 days. They've been loading up the past 90 days. I promise you that. But with that earnings report that SoFi put out today, it beat almost everything. Their EPS was a beat by, I don't know, 10 cents. The revenue blew out the 245 to 255. They added 377,000 members. I knew that was going to come in high because of the NFL marketing. I really thought that was going to give them a boost, even though it was only 30 days. Remember, guys, Q3 only had 1 month of NFL marketing with, just the stadium, the two teams. This next quarter, we're going to get 3 months of NFL marketing. So that could be a boost to adding users to the platform. So let's see. The earnings call starts at 5. We could listen to it if you guys want. I'm going to do a video on the earnings call. Let's see. I'm going to do a couple videos on the earnings call. Maybe one tomorrow, early day, maybe one later in the day. So I'll do a couple videos on the earnings discussing different things like Galileo, user growth, EPS, headed towards profitability. So let's just see what's going on right now. We're up 14%. That's pretty good, okay? But I really think this stock could run the next 3 months. Tell me what's stopping this stock for the next 3 months. There's really nothing that can stop it now. They just killed it. And we know everybody's been missing earnings lately. So let me just do a little bit of looking. I got 2 computer screens pulled up. Let me do a little bit of looking and see what's going on. Let's see. Let me check the after hours on some of the other names just to see what we got. I'm gonna read through all the comments, guys. Let's see what we got. After hours. Open Door up 15%. I told you guys Open Door is the leader in iBuying. I never stopped doubting Open Door. Let's see. Affirm is up big. They're up 30%, but they did get smashed. They were down like 16% of the day. So Affirm deserves a little bit of a movement. So I think they had a partnership or something like that. So all right, let me read through some of these comments, guys. I'm telling you, stock market, it takes patience, guys. It takes patience because it's a rough market. Let's just say that. So we got beat down 20% and we've rallied up 60% since that last earnings. The market just needs to get comfortable with SoFi. They need to feel it out, okay? I understand we were buying this one a little bit too early before, when it was a SPAC, but this company just needs a little bit of time to get adjusted to the market. I'm telling you, they're doing everything right. They're the one-stop shop right now, guys. Lending, mortgages, credit cards, the savings account offer you 0.25% interest. There's projections that could jump to 1%. That's going to attract more users. It just doesn't get better than that. Let me check out this earnings call. See what we got.
2021 earnings call. Joining me today are Anthony Noto,
SoFi's
CEO.
Can you guys hear the earnings call?
Chris LaPointe, SoFi's CFO.
Can you hear the earnings call?
We'll share prepared remarks regarding the quarter's results and then take your questions.
Is it clear?
Just after market close today, we issued a press release announcing SoFi's third quarter 2021 financial results. A discussion of our results today is complementary to the press release, which is available on the investor relations page of our website, investors.sofi.com.
Bank charter news is not there. There's no bank charter.
But the accompanying slides on
we have a bank charter still on the horizon.
And will be available as a replay for 30 days, beginning about 1 hour after the conclusion of this call. During the course of this conference call, we may make forward-looking statements based on current expectations, forecasts, and projections as of today's date. Any forward-looking statements that we make are subject to various risks and uncertainties, and there are important factors that could cause actual outcomes.
The earnings calls are about an hour.
Those indicated
I'm going to stay on this video after the earnings call, go through all the questions. We're partying today, guys. This is a party.
Form 10-Q, which
this
can
is a
be found
party.
on the IR page of our website or the SEC filings website, sec.gov/EDGAR.
I'm getting lit tonight.
As a reminder, we are not required to update our forward-looking statements.
They cannot stop us for the next 3 months. They can't stop us. There's nothing to stop us on that earnings report.
Which are non-GAAP measures that we believe are meaningful when evaluating the company's performance. For detailed disclosures on these measures and the GAAP
we could rip 30% tomorrow, guys.
You should refer
we could rip 30% tomorrow, I promise you.
In our press release, which is also posted the IR page of our website. While today's discussion will focus primarily on the third quarter results, we encourage you to evaluate SOFI's performance on an annual basis, as quarterly results can be affected by unexpected events that are outside our control.
Guys,
now I'll turn the call over to Anthony.
What did I say, guys? I said invest in management.
Thank you, Andrea. And thank you all for joining us for our third quarter earnings conference call.
The
results we're reporting today demonstrate three things. First, our ability to continue to deliver record financial results, which is a testament to our diversified business mix and our ability to execute on our long-term strategy. Second, our commitment to consistently iterate and innovate to create products that are both best in breed on a standalone basis and work even better when used together. And third, our ability to leverage data and learnings to drive more effective marketing and brand building as we strive to make SOFI a trusted household brand name. Collectively, these things are driving strong continued growth in members, products, and cross-buy. Let's take these areas one by one. I've said many times that the benefit of a unique and diversified business model is that our three distinct business segments behave differently in varying economic and operating environments. This allows us to shift focus and resources as conditions evolve. Diversifying beyond our core student loan business into personal loans and home loans allowed us to weather the storm when the global pandemic cut industry-wide student loan origination volumes.
Student loans, wait till we get them back.
And for the last 20 months. Building out a broad suite of financial services.
That's 100 million plus.
Exciting new opportunities for us to help people get their money right across online investing and spending via SOFI Invest, SOFI Money, and SOFI Credit Card. And acquiring Galileo not only allows us to innovate faster on our products, but it also positions us prominently among integrated tech platforms that service financial and non-financial institutions. Diversification across our platform has allowed us to achieve record financial results in the third quarter, even in a continued volatile environment. Our third quarter adjusted net revenue of $277 million marks another record, beating both our previous record of $237 million for Q2 2021 and the high end of our quarterly guidance.
Smacked it.
Even with the extension of the CARES Act, the lending segment adjusted net revenue hit a record of $215 million, driven primarily by record revenues from our personal loans business.
Told you guys, lending.
Our technology platform segment contributed $50 million in the quarter, or 18% of total revenue, representing 29% year-over-year and 11% sequential growth. We achieved this despite difficult comparisons from last year's stimulus benefits. And in our financial services segment, third quarter revenue of $12.6 million nearly quadrupled from last year's $3.2 million, driven by meaningful contributions from 5 businesses: SOFI Invest, SOFI Money, Lantern by SOFI, Protect, and SoFi Credit Card. This broad-based revenue growth, coupled with the benefits of cross-buying and our ongoing focus on realizing new operating efficiencies, resulted in third quarter adjusted EBITDA of $10 million, our fifth consecutive quarter of positive EBITDA.
$10 million.
Achieving record results allows us to invest in the new products and features necessary to position SoFi for long-term sustainable growth. We're sticking to our commitment to reinvest 70 cents of every incremental revenue dollar and drop 30 cents to the bottom line as we scale our business.
You got to reinvest for that growth, guys.
From the quarter
you got to reinvest for that growth.
Making an impact. In lending, we launched a next-generation underwriting model in student loan refinancing that drove an increase in approval rates within our risk parameters. In personal loans, we launched a new partnership with Pagaya to capture revenue opportunities from loan applicants we may not otherwise lend to. This allows us to serve a broader audience without additional credit risk and while maintaining our stringent approval guidelines.
You're killing it, y'all.
In home loans, we made additional investments in marketing and fulfillment capabilities to better capture purchase volumes. In financial services, we launched after-hours quotes in SoFi Invest and introduced 7 new crypto coins, bringing our total to 28. That's up from 5 at the beginning of the year. We also earned recognition for our growing robo-advisory business from Barron's, which just named SoFi the best robo-advisor for 2021. And in credit card, we launched in-app balance transfers and implemented soft pull pre-approvals, which reduces credit score impact on denied applicants. At Galileo, our significant investment to build a new cloud-based modern card issuing and payment platform is resonating with both existing and prospective clients. Having the best offering is not enough. We need to market our products and the SoFi brand in ways that engage members in order to make SoFi a trusted household brand name.
Not a word on the bank
Our iteration and marketing efforts over the last 4 years is significantly improving the effectiveness of our brand building efforts.
When that thing comes,
the third quarter was a game changer for SoFi's visibility and reach and the impact on our growth. Here are just a few examples of our success. In September, we launched our new SoFi Money Moves brand campaign during the U.S. Open Tennis Tournament and the start of the NFL regular season, leveraging television, social and digital influencers, along with TV commercials that aired during the nationally televised games from SoFi Stadium.
Works. I told you guys.
The impact has been immediate and dramatic.
Works.
SoFi TV spots drove more than 500 million impressions during the biggest moments in fall sports,
worthless or
and
something
our
like that.
unaided brand awereness doubled
my video
to a
about
new
the
high
Super Bowl
during
or
the launch
something like
week.
that. He doesn't understand.
By working with some of the biggest digital influencers across social media, we've driven an additional 400 million impressions
bears, man.
and
People are making videos.
775,000 engagements
on
with SoFi content.
As a bear.
Our hashtag SoFi Money Moves campaign on TikTok has driven more than 8 billion views and more than 1 million uses of our branded hashtag so far. The reopening of SoFi Stadium to sold-out crowds with great media coverage across the full array of sports and entertainment events has validated our decision to invest in naming this iconic destination for sports and live entertainment.
That people
nationally televised NFL games from SoFi Stadium this season have averaged 20 million TV viewers per game. That compares with the 15 million total TV viewers we previously reached in an entire year between all of our SoFi sports sponsorships. As a result, when our TV ads run during games, we consistently see a significant uptick in brand awareness, member and product growth, and SoFi app downloads. We're also getting better at leveraging our highly engaged member base to drive product adoption via cross-buy. Let me share 3 examples from the quarter. First, by
everybody got to smash the like button, man. We don't got enough likes.
Scale our top of the funnel
smash the like button for
leveraging
the algorithm, man. Get the likes up.
Expanding our popular SoFi personal loans money bundle to 100% of our members. We drove a 65% sequential increase in cross-buy volume among SoFi Money First members.
We're gonna rip. We're gonna rip for the next 90 days.
To earn points to our unique SoFi Rewards program, the only program that allows members to earn points for both transactions and responsible financial behaviors, bringing our total earn and redeem options across the SoFi platform to 33. SoFi Rewards drove 15% of the quarter's new product growth. And third, we launched promotions around our new Refer the app and SoFi Money referral programs which drove 18% of member growth in the quarter and significantly increased our app downloads in our rank and app stores.
App Store, baby. You got to get ranked top 10 to be a winner.
Were instrumental
in that top
in driving
10.
member, product, and cross-buy growth.
Like Square,
the third
PayPal,
quarter was our second highest ever for both member and product growth. Total members grew 96% year over year to 2.9 million. We added 377,000 new members, which is an amazing 35% increase versus the 279,000 new members we added in the second quarter.
277 to
108% year over year to nearly 4.3 million. We added 600,000 new products, which is a 24% increase versus the 483,000 new products in the second quarter. The scale we're achieving in money, invest, and credit card, which are at the top of our product funnel.
Can somebody comment the guidance? I haven't had time to look. What was the guidance?
The third quarter was a record for cross-buy products with SoFi Money,
300,
SoFi Invest, and SoFi Credit Card First members accounting for 73% of total cross-buying,
Q4 guidance,
demonstrating that as the top of our funnel scale increases, so will cross-buying and the benefits of our financial services productivity strategy. As important, when a bottom of the funnel loan is cross-bought, the lifetime value of the member doubles from already industry high levels to more than $1,600 versus just a loan-only member.
Q4 next year.
Our momentum continues at Galileo as well. We signed 13 new clients, bringing our year-to-date total to 35, and finished the quarter enabling our clients to serve 89 million accounts, up 80% year over year. Today, we are in our strongest position ever to fund and execute on our ambitious long-term growth strategy. The $1.2 billion we raised in a zero-coupon convertible debt offering in October brought our total capital raise over the past year to $3.6 billion and our total capital to $4.6 billion. And our pending application for a bank license represents a potential new source of funding and flexibility for us. I am proud of this impressive list of accomplishments for the quarter.
See, Noto can't even talk about it. You hear that? It's coming. They just can't talk about it.
As we head into the final weeks of 2021,
we're gone.
And turn our focus to 2022,
bank charter
I am awed and humbled by all the SoFi team has been able to accomplish this year. And I'm thrilled for our next chapter in 2022. Now I'll turn it over to Chris for a discussion of the quarter's financials.
Bears are going to be dying to get out tomorrow, guys. This thing's short like everyone. 50 million shares.
We had a great quarter with strong growth trends across the entire business.
They're going to be dying to get out of this.
We exceeded our financial outlook while achieving record revenue and our fifth consecutive quarter of positive EBITDA, despite facing a number of headwinds in the quarter. Our results further validate the durability and long-term growth potential of the diverse and differentiated business model we built.
We killed it.
I'm going to walk you through some key financial highlights for the quarter and then share some color on our financial outlook. Unless otherwise stated, I'll be referring to adjusted results for the third quarter of 2021
Banks are good hedges.
Third quarter of 2020.
Banks are good hedges.
Our GAAP consolidated income statement and all reconciliations can be found in today's earnings release and in our upcoming 10-Q filing. For the quarter, we delivered record adjusted net revenue of $277 million, up nearly 20% from the prior sequential quarter's record of $237 million, and $22 million above the high end of our guidance of $245 to $255 million.
They're killing it. I promise.
We also delivered $10 million of adjusted EBITDA, which came in $7 million higher than the high end of our guidance of negative $7 million to positive $3 million. We continue to make great strides on an annual basis as well. We've generated $912 million of adjusted net revenue over the last 12 months, an 82% increase from the same prior year period. We also generated $37 million of positive EBITDA over the last 12 months, a significant $195 million improvement from our $157 million loss in the same prior year period. Our incremental EBITDA margin for the last 12 months was north of 40%, but as we've discussed previously, we intend to reinvest 70% of incremental revenue back into the business on average and deliver incremental margins of 30% to drive sustainable growth for years to come. Now on to the segment level performance. Our record lending segment adjusted net revenue of $215 million was driven by a 49% increase in funded volume to $3.4 billion in total. The largest contributor of the funded volume growth was our personal loans business, which grew 167% or $1 billion year over year to $1.6 billion in originations for the quarter, a new high for us. Not only that, personal loans funded volume grew sequentially by 27%, even as we stuck to our stringent credit standards, finishing the quarter at 105% above Q4 2019 pre-pandemic origination levels, a true feat. This growth was driven by our ability to capture increased demand from borrowers looking to remodel homes and refinance out of variable rate debt into attractive fixed rate products as interest rates increased. In addition, increased net interest margins and strong gain on sale margins drove material year-over-year growth in net interest income and loan sales revenue. Strong growth in originations and record lending revenue are a testament to the success we've had in diversifying our lending segment beyond student loan refinancing, which remained at 50% of pre-CARES levels, and in our ability to navigate the evolving credit and interest rate environment. The lending business delivered $118 million of contribution profit at a 55% margin, up from $103 million a year ago. Shifting to our tech platform, where we delivered net revenue of $50 million in the quarter, up 29% year over year versus a tough comparison driven by stimulus benefits in the same prior year period. Overall, growth was driven by 80% year over year Galileo account growth to 89 million in total, and contribution profit of $16 million represented a 31% margin. As discussed previously, we are committed to investing in the platform to ensure that Galileo is well positioned to capitalize on the secular shift from physical to digital payments and the rising overall demand for more fintech services. Accordingly, margins are down from 61% a year ago due to our significant 2021 investments in technology capabilities overall, our migration from on-premise to the cloud, as well as ongoing investments in new products and
short-term call options. Because
it's worth
I bought
noting
the
as well
weeklies on SoFi,
that Q3 2020
and those could be
included the 100% margin
Thursday,
contribution of our equity method investment in Apex,
sign up for the
which was
Patreon
called
if you want
earlier
to
this
get
year.
top stocks to be
We will
buying. I'm
continue
recommending
operating
other
our tech
stocks
platform
besides
business in the
SoFi.
20 to 30% contribution margin range for the foreseeable future to set the stage for compounding long-term growth. On to our financial services segment, which continues to benefit from strong product growth across our broad and diversified suite of offerings. This segment delivered revenue of $12.6 million, nearly 4 times the prior year quarter at $3.2 million. The sequential decline from $17 million of revenue in Q2 of 2021 reflects the absence of episodic revenues recognized that quarter from our advisory and IPO underwriting services, totaling about $4.5 million.
Guys, I bought a lot of
Q2
options
specific
too,
items,
just so you know.
revenues were essentially flat. Within the segment, year-over-year revenue growth was particularly strong in SoFi Invest, Lantern, Credit Card, SoFi Money, and Protect. Exponential growth in products, which grew 2.8x to 3.2 million from 1.2 million in Q3 of 2020, drove our strong performance. Every one of our financial services products grew by triple digits year over year.
We're killing it.
We hit 1.2 million products in SoFi Money, 1.2 million in SoFi Invest, and 750,000 in Relay, and continue to see good momentum in credit cards. While we're starting to see a more meaningful contribution to consolidated revenue from this segment, we remain in investment mode, focused on creating the right unit economics for each business to drive long-term sustainable growth.
Regardless of after hours,
you can see this investment reflected
SoFi
in our
could run the
Q3
next
financial
3
services
months.
contribution losses
just
of $39 million, which were up $2 million from a loss of $37 million a year ago.
There's nothing that
Excluding
can stop
acquisition
SoFi
marketing,
right now.
contribution profit improved by $2 million. The next thing I want to address is our balance sheet. Overall, we're very well capitalized. Over the last year, we have raised $3.6 billion of capital, $2.4 billion of which came through a combined private placement led by T. Rowe Price, a PIPE, in our IPO, and $1.2 billion of which came through a 0% convertible debt offering that closed in October. The strength of our balance sheet has provided us with significant flexibility and helped lower our overall cost of capital, resulting in strong net interest income in the last 2 quarters. Our current book value is $4.6 billion, and our capital and leverage ratios are extremely strong. In addition, we still have access to nearly $6 billion of warehouse capacity to help fund the operations and growth of our lending segment. We are excited about the strength of our balance sheet and will continue to make choices that ensure the most efficient cost and use of capital. All right, I'll finish up with guidance. Over the last several quarters, we have demonstrated the benefits of our uniquely diversified business model by delivering strong financial and operating growth. For Q4, we expect an acceleration in growth with $272 to $282 million of adjusted net revenue, up 49 to 55% year over year, and $2 to $5 million of adjusted EBITDA as we continue to invest to drive growth. We now expect to deliver $1.002 to $1.012 billion in adjusted net revenue, exceeding our original 2021 full year guidance of $980 million, and adjusted EBITDA of $28 to $31 million, above our original full year guidance of $27 million. This is despite facing previously discussed headwinds estimated to be $52 million of negative impact from the CARES Act extension on our SLR volumes and our prior equity investment in Apex being called earlier this year, which we mentioned during our Q2 earnings call. Switching to non-cash items below our adjusted EBITDA. We announced last week that we will be redeeming the 28 million SOFI Technologies public and private warrants that were issued as part of our IPO process. Warrant holders have the option to exercise on a cash or cashless basis up until December 6th. Q4 share issuance associated with these exercises will be in the range of 10 to 28 million shares, depending on exercise methodology. And the Q4 non-cash P&L impact will be determined based on the change in fair market value of the warrants as of the redemption date relative to the end of Q3 2021. Finally, we forecast stock-based compensation expense to be $80 to $85 million in Q4. Overall, we're thrilled with our performance in Q3, where we delivered more than $1 billion of annualized revenue and our fifth consecutive quarter of positive EBITDA. We continue to make great progress and remain very well capitalized to continue pursuing our longer-term objective of ultimately becoming a top financial institution. With that, let's begin the Q&A.
Q&A.
As a reminder, if you'd like to register a question, please press star followed by 1 on your telephone keypad.
Upgrades.
If you change your mind, please press star followed by 2. And please ensure you're unmuted when speaking.
Over 30.
Our first question comes from Betsy Graseck of Morgan Stanley. Betsy, the line is yours.
Morgan Stanley, upgrade.
Hey, thanks so much. Good evening, everyone. Can you hear me okay?
Morgan Stanley, okay. $25 price target.
All right, great. Yeah, I had two questions to kick off here. One was just understanding in financial services the how you see the impact of the new coins that you launched this quarter, and if you could update us on how you're thinking about additional coins from here. And really the underlying question is, you were flat QQ X the one-timers you called out. So help us understand how you're thinking about the trajectory in that line as we move forward. And am I right in thinking that coins might be part of it, or would you, kind of direct focus elsewhere? Thanks.
Yeah, I'll answer the question from a consumer value proposition standpoint, and then Chris can get into the numbers in more detail. We endeavor to differentiate our products on 4 macro things: fast, selection, content, and convenience. And then we want each of our products to work better when our members use it with another product. As it relates to selection, we're the only invest product that has single stocks, fractional shares, 6 of our own ETFs uniquely built for our members, robo-advisory accounts, as well as cryptocurrency. And then within each one of those, we're trying to drive more and more selection as well, in addition to driving horizontal selection. And so you're right, we added a number of coins in the quarter. Actually, throughout the year, we started with 5 coins. We're now up to over 25 coins. And we'll continue to look for opportunities to add selection generally, both within cryptocurrency and outside of cryptocurrency. And we hear from our members every day what they want, and we want to give them the opportunity to buy what they would like, but to do it in a responsible, diversified way. So we're educating them on the risks of cryptocurrency and also dollar cost averaging and setting up recurring investing capabilities. We're really encouraged by the trends we're seeing in our invest business overall. We had really strong growth in both new members in invest, and we had really strong growth in AUM. I'll turn over to Chris to talk about the differences between Q2 and Q3, as well as how we see the momentum going into Q4, which is quite strong for invest overall.
Yeah, so hey Betsy, in terms of Q2 versus Q3 and crypto revenue specifically, we don't disclose that in our filings, but you'll see in our 10Q that gets filed in a few days that we do disclose brokerage revenue, and that was down by about $2.7 million.
Upgrades might come in over 35, to be honest. They killed it.
Activity.
The user
However,
growth
the headwind
is what's going to get the
that I
upgrades.
just mentioned and the
Future
decline in
revenue.
brokerage revenue were offset by sequential strong growth in our SoFi Money, Lantern, and credit card businesses, which allowed us to generate that flat revenue that you talked about quarter over quarter when excluding those deal revenues. And this speaks to the benefits of the diversification within financial services.
They might upgrade
And
it
then
to
in terms of
35
as we
without
think
the
about
charter.
the fourth quarter and our guidance, we are guiding for an acceleration of year-to-year basis to 49 to 55% year-to-year growth, which is faster than what we had in Q3 on a year-to-year basis. When you think about sequential growth, the vast majority of that sequential growth will come from tech platform in a similar fashion as it was in Q3, as well as financial services, which would be material faster sequentially into Q4. We're seeing really positive trends in both of those businesses and really benefiting from the initiatives in Q3 flowing into Q4 from a revenue standpoint.
Got it. Thanks. And then separate question is on the question around the bank charter. And I know you have a question around the bank charter. And I know you have a question around the bank charter. And I know the question has to do with the recent OCC acting head speech where they kind of indicated that there might be a need for holding company level regulation from institutions that are seeking a charter outside of the regular bank channels. And I'm wondering if you saw that speech and if you have any thoughts or comments as to whether or not that would change your plans as to how you're thinking about moving forward with the potential for a bank-like structure in part of your business.
Yeah, I was very relieved by that speech. We were watching it very closely. Some people may not realize this, but we applied for the exact license that the current acting head, Michael Hsu, mentioned. We applied for a bank holding company, national bank charter, which will be regulated by the Federal Reserve as a bank holding company and will be regulated by the OCC as a bank. Both of those will be our two primary regulators in addition to the FDIC. So we're really fortunate in that we've kind of built the business for durable long-term growth, taking the harder path. Our lending business originally was built on the back of licenses in 50 states. Our home loan business, and these are our licenses, not borrowed licenses, not rented licenses. Same thing with our home loan business, and in cryptocurrency, we have money transmitter licenses. So we've taken a harder right approach over the easier, I think, wrong approach people have seen in time, including applying for a national bank charter instead of applying for an ILC, or applying for a fintech charter, or applying for a crypto charter. We applied for the full Monty, exactly what the acting head indicated everyone should be applying for if they're taking deposits or taking cash. We're really encouraged by the progress we've made with our regulators in the exam process since March. The feedback has been constructive. The timeline's not specific, and there are more steps beyond just the exam, but we're encouraged by the constructive feedback we've gotten and working with them as real partners. So we look forward to finishing this last mile and reaching another milestone for the company that we think will be a huge competitive advantage, especially in light of the comments last week.
Okay, thanks so much, Anthony. Appreciate
December is possible.
Yep.
December is possible. It's possible.
Our next question comes from Moshe Orenbuch of Credit Suisse. Moshe, the line is yours.
Great, thanks. I was hoping you could talk a little bit about the underwriting process and the changes that you made that have allowed you to kind of expand originations. I think there's a little bit of a discussion with that in the student part. And then also some additional context on the relationship with Pagaya and what that can do for SoFi.
Gaia, here we go.
Yeah, I want to be super clear on our lending business. We have not changed our credit model. We haven't changed our target focus. Our average FICO scores are high quality prime FICO scores that are still well into the 700s. What we're doing is we're constantly testing all the different variables and their indication of where we end up on loan size, on pricing, on life of loan losses, on delinquencies. So it's just continued iteration to make sure that we're being efficient on both the credit spectrum as well as the pricing spectrum. And we develop new generation models that are based on data and analysis. but we haven't changed our philosophy or approach to the credit that we're willing to underwrite. Is there anything to that?
Will Uncle Joe wash away college loans?
I think, was there a second part to your question? I think it was tied to Pagaya. Yeah, Pagaya. Yeah, Pagaya is an extension. Yeah, sorry, I apologize. So Pagaya is the extension of a strategy we started 2 years ago. We're able to meet about 30% of the demand that we get for our unsecured personal loans, what we call PL. And what we found was that we're obviously investing in our brand, investing in brand building. And if we're only meeting 30% of our demand, how could we capture more value beyond that if we don't want to change our approach to credit? And we built a property called Lantern Credit by SoFi, which is a financial product comparison property. Our first step was to take some of the people that we would not otherwise lend to and send them to our Lantern partners and generate lead revenue from that.
SoFi's
Pagaya is an extension of that success years, and we're integrating their credit model into our decision engine along with the SoFi credit model. And so we're running both simultaneously. Pagaya allows us to serve, the partnership allows us to serve a broader set of people than we'd otherwise fund, but we're not taking the credit risk. We're not changing our credit profile. And Pagaya and other partners are taking that paper, underwriting it, pricing it, and then taking on the credit risk. And we maintain the servicing and the relationship with that member so we can continue to offer them other products and services and, quite frankly, improve their credit and be able to serve them well and help them get their money right. It was de minimis in the quarter, but it's a bigger opportunity for us to add additional high margin revenue against all the investments that we're making. So it's a part of a broader strategy.
Got it. Thanks. That's extremely helpful. And maybe if you could just talk a little bit about your expectations on, marketing costs and how you see them trending as you go forward. You talk. I think Chris talked about the reinvestments, to drive future growth, and what are you actually seeing,
Disney.
And how will that be reflected over the next several quarters?
Disney.
Yeah, we saw a real game changer in our marketing, as I mentioned in my prepared remarks. The elements that we've worked hard to build over the last couple of years, multi-layered marketing, television, the stadium, our direct mail marketing, our digital marketing, social influencer marketing, it's all coming together to drive really strong performance. We're achieving our long-term customer acquisition cost by product, which is allowing us to drive the level of scale that we're driving sequentially. And we're seeing good efficiencies there. Each one of our businesses and their leads are really challenged to build over the long term a best-of-breed product based on the differentiators I mentioned and best-of-breed unit economics. And those unit economics are tied to very specific targets across each of the cost line items, as well as their customer acquisition costs. They're all operating at their long-term customer acquisition costs, and we're still operating in that range, which is what's really helping us drive the scale that you see. Cross-buying was a record for the quarter. One of the things that may not be obvious to everyone when we say 73% of the cross-buying was driven by money investing credit card first members is that we're not paying that second customer acquisition cost.
I'm going to stay on live for like
2.9 million members in the quarter.
An hour and a half
when
after
we
the
went
call,
through the public process of the presentation in January of this year, 2021, we had a year-end target of 3 million members. Well, we ended the quarter at 2.9, and we're over 3 million now, as you would imagine, and we're seeing good, strong trends there. If you think about our total cost per member, which went down sequentially, we should have significantly even greater marketing costs, but we're driving the member growth through lower cost vehicles like referrals and other programs that are unique to SoFi. And it's allowing us to achieve outsized growth in members relative to expectations, but still delivering on profitability.
Referrals, they're working. Less ad dollars.
Thanks very much.
You're welcome.
Our next question comes from Dominic Gabriele of Oppenheimer. Dominic, please go ahead.
Oppenheimer. They love
great
SoFi.
And great results. If you think about the launch, I believe, this quarter of SoFi Financial Planning, could you just walk through some of the dynamics that you're looking to gather among your customer base with launching that product in particular? Then I just have a follow-up. Thanks.
Sure. I think what you're referring to is our partnership with FPA. It's not a new program. It's an extension of what we call SoFi at Work. SoFi at Work is our approach to enterprises, to companies, where we offer them a suite of products and services and a portal for their employees to take advantage of unique
Smash
offers from
the
SoFi
like button.
that
Come
are
on.
driven for us through their employee
We need
communications.
2,000.
The FPA is an
1,000 people
association
watching.
that has a significant number of financial planners. The program that we brought to them is the ability to get those same benefits for their customers. And it's a new distribution relationship for the at-work program, which contributes to all of our products. And it also has revenue stream itself from on a per seat basis. And so it's not a building of financial planning at SoFi. It's really a new relationship with the FPA. One thing that we do provide for our members that is direct is we do provide free certified financial planners already. In addition to that, we also have the Relay product, which gives us a significant amount of information from all their other financial products so we can better personalize offers to them. Often it's the case that we'll see that someone through Relay has a number of credit cards that are fully utilized. And we can offer that person, based on what we see, a lower cost term loan through our personal loan business. Or we could see someone with a lot of excess cash in their SoFi Money account, and we could offer that person a free certified financial planner session to help them invest that money and have it compounding over years. We could also see someone that could be paying a personal loan, and that personal loan could still be a federal loan and one that we could refinance at a lower cost. So we're in the business of financial planning every day, helping our members answer
Some people
three
say
questions.
You can't like the video,
What
but the
must they
video
do that
has
day in their financial
790
life? What
likes.
should they do? What can they do? But it's more of the holistic experience at SoFi as opposed to one particular
Some
thing.
people can like it.
Great.
So
And
a follow up as well.
yeah, I mean, if you thank you. If you we talked about the technology segment margin being in the range of, I believe, 20 to 30. It obviously came in above that range this quarter. Maybe you could talk about the cadence of how that margin reacts over the next number of quarters, and then how your progress is overall in moving your clients to the cloud. Okay, great. Thank you very much.
Yeah, we're really happy with the addition of Galileo to the company 18 months ago. The team has done a phenomenal job of upgrading the on-prem technology capabilities, as well as completing the cloud build-out. We're currently onboarding all new partners into the cloud directly, and we're building a detailed plan of migrating existing customers into the cloud that will take place throughout all of 2022. In terms of the investments that we're making from here, now that we have the on-prem upgraded and the cloud built out, and it's really just about migration, we can reallocate our resources more offensively and launch new products and services. We did already launch a new disputes product, which the team re-engineered and reintroduced for our members, and that was a big heavy lift. And there will be a series of other products that unfold in 2022 that will drive incremental revenue against the existing 80 million accounts, 89 million accounts that we enable, not to mention allowing us to capture new partners. We had 13 new partners in the quarter. That brings us to 35 for the year. They'll start contributing new accounts in 2022 as well. In terms of the investing,
can somebody drop me Galileo customers,
staying in that 20 to 30% margin range. There could be a quarter where
90,
revenue
80,
comes in. We can't spend
Galileo
enough, and the margin's a little bit higher, but there's no change in our desire to want to invest as much as we can in that business, but being prudent in that 20 to 30% margin range. We just think the growth opportunity here is so enormous. We don't want to underinvest in it. We want to drive durable compounding growth over time. And we think that's the right level of investment to make to ensure that we're capturing it.
89? Holy crap.
Thanks again.
Our next question comes from John Hecht of Jefferies. John, please go ahead.
Afternoon, guys. Thanks for taking my questions. First one is the general yield relative to originations in the lending segment was stronger this quarter than prior quarters. And I'm wondering, is that gain on sale execution, or is there other fee accruals that we should be aware of? And then also maybe the mix of whole loan sales to other financial services companies versus sales into securitizations, and how the execution works out there.
Jeffrey's got a 25. They'll come in over 30.
Yeah, sure. Hey, John, this is Chris. So in terms of what drove some of the growth there, we saw good sequential and year-over-year growth, both in NIM revenue as well as loan sales and originations, which was driven by our overall gain on sale margins. So you'll see this in the 10Q that gets filed in a few days, but gain on sale margins remain very healthy in our business and improved in both personal loans and home loans. In personal loans, the gain on sale margin was 4.5% in the quarter. That's up from 4.2% last quarter. Student loan refinancing remained at a very healthy level at 4%. And our home loans business was at 3.1% in the quarter, up from 2.7% last quarter.
SoFi went.
In addition to that, the things driving the strong NIM margin
down one
was overall reduced cost of capital as we deployed some of our IPO proceeds towards paying down warehouse debt in the quarter, and that helped drive some of that yield.
The shorts.
And then in terms of the mix of whole loan and securitizations, it was in line with what we've seen historically. It's about 50% in each of personal loans and student loan refinancing, 50-50 split.
Okay. And then really strong quarter of customer acquisition, and I know you guys talked about different marketing channels, and particularly in the SoFi Money product.
I was never worried about SoFi's
revenue.
I knew they were going to hit that.
Given the kind of increase in personal loans versus student loans and this and that in kind of the inbound entry products. And, does that mean anything in terms of kind of the unit level economics in the future?
I am.
We've definitely seen efficiencies in the personal loan on the marketing line from cross-buying. We've had really strong cross-buying in both PL and SLR. We shared some of those rates with you during the IPO process, and they continue to be strong in that range. Home loans has always been very high in the 60 to 70% range, and that's stayed consistent. The marketing efficiencies on PL have been the greatest. There, the unit economics are very attractive, and not paying that second customer acquisition cost results in more variable profit. But we're trying to reinvest all those benefits back into the business just because we know what the response is to the spend. It's a good return.
Guys, just so you know, before I really put out videos heavy,
products,
I listen to these earnings calls 3 times.
And we just want to make sure that we're
everybody to listen to this call 3 times.
Driving to really high margins and not capturing the opportunity in front of us. The entry points, the way to think about the top of our funnel is money is at the very top of the funnel. It is a big driver of cross-buying a money first member. In fact, I think I said in the prepared remarks, it was able to drive 65% of the cross-buying in the quarter, just given how much more data we have and the activity on a day-to-day basis from that product. And Invest contributes, also benefits.
I see it now.
Credit card
Galileo,
contributes.
89 million.
The other product that we have that doesn't drive revenue directly is Relay, and it would add another 10% to the contribution of cross-buy to Money, Invest, and credit card. So instead of the 73% of cross-buy driven by Money, Invest, and credit card first members, it would be closer to 85% if we added in Relay. So there's a lot of different levers driving it, and we are seeing the benefits, but we're spending it back to maximize member and product growth, and then that will lead to revenue in the future because it takes a while for those member and products that come on that are outside of loans to build up balances, your AUM, or start to spend on your credit card before it hits the revenue line. And we do think we're going to have strong momentum going into Q4 versus Q3 in the financial services line, as I mentioned.
Great. I appreciate that color. Thanks.
Thank you.
That'll be huge.
Our next question comes from Dan Dolev of Mizuho. Dan, please go ahead.
Mizuho, what's he at?
Hey, Anthony. Hey, Chris. Great results and great quarter. Amazing. So, just had a question on the personal loans and maybe on the partnership with Pagaya. How much of the competitive advantage it is? It looks like the results are really strong. Like, what is how much of a competitive advantage is for SoFi to have that relationship, and what is so unique about it? Because I've been hearing more and more about it, and then I have a follow up. Thank you.
All right, Tudor, I'll let you listen.
They're a great company. They have strong technology. They have great partnerships that allow them to drive their lending business. And, we attempted over the last 4 years, I think Michelle would tell you, we've probably attempted 2 other times of integrating a partner so that their credit model would run simultaneously with ours in our decision engine. And we never got to the point that it was working really well. Not only is it working well with Pagaya from a technical standpoint, but the team is now iterating and learning how to improve the conversion from the offer down through all the way to funding. So it's a really unique opportunity. As I mentioned, we're capturing 30% of the demand that comes in for our personal loans, which means we're missing 70% of it. This type of relationship on top of what we're already doing with Lantern allows us to capture that. But the thing I really love about this relationship is not only are we capturing it economically day one, but we're also capturing that member as part of the SoFi family, and we can help them get their money right with other products like investing and SoFi Money, SoFi credit card down the road, SoFi Relay, Protect, and there are other lending products as well. So it's a really important economic relationship. It does take a unique technology to make it happen, and we found the right technology partner, a lending partner, but it also has a longer-term benefit beyond what we'll report in any one quarter.
Missoula is going to come in high.
Yeah,
I'm telling you.
Totally cool.
We're at 28.
Very, very strong. And I have a quick
35.
follow-up, Anthony and Chris. Like I'm looking at the product per member, and it's looking really strong, and it's improving sequentially really nicely. Like, where are we headed? I mean, this seems to be like the dream come true of the single money app, and you're moving towards that really quickly. Like, what can you share about those metrics, which look really strong this quarter? Thank you.
Missoula, 35.
Yeah, we're growing really fast. So we're growing the numerator and the denominator, and both in terms of members and products per member. And so it can mask some of the cohort trends, but generally what we're seeing is our strategy playing out and older cohorts having more products per member than newer cohorts, and you see the weighted average math by just dividing products by member.
Charter is close.
So I think we have a really good understanding of the types of information that we can use to come up with personalized recommendations for our members and serving them in our member home feed, which is driving additional product adoption. Referrals are a very unique product that allows us to build trust and reliability with one member. And then they refer that to their friends and their family, and we get other members that look like them, same demographically. So that's really working. Our rewards program, as I mentioned, is contributing as well. We have a rewards program that really will be hard for others to match because they'll either not have all the products or they won't have the technology. We built a technology platform that allows our product managers and general managers to trigger rewards off of any activity they want, and we redeem into all of our products regardless of where it's triggered. So people get 1% back if they just use the credit card and just redeem into credit card. They redeem into invest, or they redeem to buy cryptocurrency or to buy single stocks or robo or ETFs, or if they redeem into money or they pay down loans with those rewards, we double the points. But we trigger those points not just off of credit cards. Right now we're triggering off of recurring investments, off of direct deposit, off of bill pay.
I'm going to go over the price action, what I think soon.
So that's starting to have an impact. And so each one of these product enhancements that leverage our unique strategy, they're contributing to that product growth. And that's why you see the relationship of 600,000 new products to 377,000 new members. It's hard to drive both so fast, and we're at the point now where we have the data, the logic, and the approach to doing it, and we're really looking forward to taking it to the next level in 22.
Yeah, amazing results. Congrats again.
He's coming in over 35 tomorrow. That Missoula guy. Watch.
Our next question comes from Sean Horgan of Rosenblatt Securities. Sean, please go ahead.
He's like 28 or 30. He likes this stock.
Hey guys, thanks for taking my questions. So I wanted to just dig in on the cross-buy rates. I appreciate the additional disclosure you gave. I think you said cross-buy for SoFi Money First members increased 65% sequentially. Can you expand on the products that comprise these cross-buy volumes? In other words, what's the typical second product for the average SoFi Money First member?
This guy's talking's over $30 price target.
I would say it's not getting into that level of detail, and I don't want to not answer your question. It's just we're not trying to actually drive people to where we benefit. We're trying to serve them relative to what the opportunity is to get their money right. So we're indifferent what the first or second product is. If someone comes in through a student loan refinancing and then takes out a personal loan, we save the $800 of customer acquisition cost, and we're super happy. If they come in through SoFi Money and then go into invest, we're equally happy.
Saving money.
And so we're trying to build each product by itself to be best of breed across the value prop that I mentioned earlier. as well as best in class in economics, so that we'll always remain indifferent. We want to use the data we have to make the right suggestions to them at the right moment in time, be there for all the major decisions they make in their lives and everything in between. So we look at that data, we understand the success of our ability to drive personalization, but we're not trying to drive some combination. We want to serve them when they need the products the best. And if we do that, and that's our job to be done, we'll keep coming back.
$16 guy.
And we're measuring NPS scores as well as reactions to offers in their member home feed to make sure that we're meeting our satisfaction levels, their satisfaction levels the way we should.
I'll do more lives.
It is very much the case that each product drives cross-buy to others, but it's different percentages. Generally, the more data we have for one product, the more cross-buying we can drive from it.
Yeah, that makes sense, I guess, then.
Gotta listen to the call again.
In a quarter where personal loans, for example, did really well, I guess the incremental growth overall is a fair assumption. So just switching gears to my follow-up, you provided some helpful metrics around your brand and influencer campaigns. For example, the 8 billion views on TikTok. Can you discuss how these metrics are translating to new users and at what customer acquisition cost?
According to their investor presentation,
and has your allocation of marketing spend to these channels increased as a result of the recent data privacy changes, weighing on customer acquisition costs through more traditional performance marketing channels?
Yeah, I'll answer the last part of your question first. We really haven't seen an impact to our customer acquisition costs from the data privacy changes that you referenced for others and other people have seen. So I would just say that up front. I said earlier that our customer acquisition costs by product are within the range of where we set them for long-term targets to make sure we get the right LTV to CAC relationship and the right long-term return. And so the team has done a good job of being able to drive this growth by staying within those limits. One measure, now we report sales and marketing. About 60% of our sales and marketing is true customer acquisition cost marketing as opposed to fixed costs. But even if you just took our total sales and marketing and divided it by new members, you would see that marketing cost per member went down sequentially, I think like 8%, which just shows you the efficiency that we're growing really fast. We're spending a lot more dollars. It's very rare that when you have the dollar increase that we had in the quarter and that we've been driving, that you actually drive efficiency. So I talked about effectiveness in our prepared remarks.
I think a lot of the firm price action
also is efficiency that you can just see in the P&L if you do that math. So we're really encouraged by the impact that our marketing has had and the integration into the product experience. And we'll continue to reinvest in those bands that I mentioned. Each product has its own, but that's one way for the street to look at what's the overall efficiency of our marketing to new member. And revenue, I want to reinforce this point again. Revenue from loans comes day one. The revenue from the financial services products unfolds over time on a direct basis. It unfolds on an indirect basis over time as well. So a new money member that comes in could drive revenue faster by driving cross-buy into a loan than it drives on its own during that quarter per se. But obviously when a money member signs up, they then have to transfer money in, start a direct deposit, and spending. Over time, those two elements start to increase. And invest, they have to add AUM, they start investing. They're typically not sitting on $2,000 or $3,000. It takes a while for that to build up to that level. But as it does, the revenue starts to come in and starts to contribute. Same thing with credit card. They have to start spending. And so the momentum that we're seeing in the financial services line and that we're guiding to is a reflection of the growth over the last couple of quarters starting to kick in from a revenue standpoint sequentially, but obviously was up close to fourfold on a year-over-year basis. But I don't want anyone to miss the point that those financial services members that come at the top of the funnel, they could drive lending revenue day one, day two, right away. We don't have to wait for them to build up a balance or AUM.
We have no further questions on the phone line, so I'll hand back to Anthony Noto, CEO.
Thank you very much. I'd like to finish today's call with what I told our SoFi team at our all-hands meeting when Q3 ended. We've accomplished more at SoFi this year than many other companies will achieve in a lifetime. I'm incredibly proud of these accomplishments and the additional progress we made during the third quarter, which marks a year-long sprint of incredible company milestones. Now the only thing that stands between where we are today and our long-term aspirations for SoFi is us. And I have absolutely no doubt that we have the right strategy, the right team, with the right goals to deliver on these aspirations and more. Thanks for joining us today, and we look forward to talking to you when we report fourth quarter results. Thank you.
We'll take it.
This concludes today's call. Thank you for joining. You may now disconnect your lines.
All right, guys. That was pretty darn good. That was a pretty good call. I mean, I'm looking at, the Galileo now. I'm looking at the users, the products. It's going to be really hard for any shorts or bears to get in front of this company and just stop it. Like, I really think that the next 3 months could just be like some smooth sailing, like week by week. We just had this nasty inflation data came out today. It wasn't SoFi. It wasn't just SoFi. It was Fubo TV, Open Door, Affirm. Guys, the people at Affirm were getting destroyed. They were down 17% before even earnings came out. So inflation data, we're just going to have to get used to it. This is going to happen every month. A lot of companies are going to feel it. It's not just the high growth. Even Amazon was down 3%. So the inflation was pretty bad. I mean, we're going to have to get used to that. But there is companies that don't care about inflation and are just running through it. And SoFi is part of that group. And I think investors will flock to SoFi the next 3 to 6 months, even if inflation continues to get worse. There's no reason why not after an earnings like that. You're going to see dozens and dozens and dozens of headlines. Investor Place, Motley Fool. You're going to see them everywhere. Benzega. There's no bad headlines that they're going to be able to put in these articles for SoFi. I mean, they demolished every aspect. EPS, revenue, customer growth, Galileo growth, lending's up, acquisition cost is down. I mean, they literally are killing it in every direction. Only really dark cloud over the shoulders right now is the bank charter is not approved. And I still think we can move up a lot even without the bank charter. I think this stock could still rally to 30 plus without the bank charter. As far as bank charter, I really have no clue. I'm going to still go with 2021 just because they have it on their investor presentation of making the money, the savings on the bank charter in December. So maybe it's at the final round. Maybe they're close, but we should be close on that bank charter. But the stock could still rally significantly without a bank charter. And I was just saying this. I mean, Affirm right now, is up 28%. I think they made some good buy now, pay later increases and stuff. That company is like doubled our value. Like Affirm is like, I don't think people realize the market cap that Affirm is actually at. That's what I've been saying in my videos. I think Meet Kevin has a lot of power. He probably has over, 100,000 people buying into that stock, and the valuation is insane for Affirm. And I don't think people realize how expensive that stock really is. Let me check the market cap. They're at 37 billion market cap, even on that pullback today. And they're going to be going higher than where they were at. They're going to be at 40 billion again. So we're under 20 billion. We're less than half the valuation of Affirm, and we're killing it. We have a lot of room to run. We have more revenue. Firm's already putting out their 2022 numbers. We haven't even talked about our 2022 numbers yet. So there's just a lot of upside right now, to be honest. I just think these other, like I said, remember I said I don't think Robinhood is going to do good. They're relying too much on crypto. It's really coming back to hit Robinhood because of that those meme coins and those trading volumes. They got that earnings report was horrible, and I would never recommend, even though I use Robinhood and I like Robinhood, I would never recommend Robinhood to you guys because I already knew that they hit their highest levels in Q2, I believe, or Q1. They might not touch those types of levels for 2 or 3 more quarters. They have so much recovery to get to that Dogecoin level. So that's one. That's one of the fintechs. So I would not recommend Robinhood. And Square, it's a great company. It's been growing. But the thing is, I keep telling people, their acceleration of Bitcoin revenue, you have to really look at what revenue is coming through Bitcoin. It is like crazy. And that is why that stock took a hit, because they're relying so much on Bitcoin, because the CEO loves Bitcoin. He wants to be mining and all that stuff. If you go look at Jack Dorsey's Twitter, but like I said, Anthony Noto is really smart. He's not putting any Bitcoin on the balance sheet. You know, you see a lot of companies that have big money buying up Bitcoin. He's not doing that. Cash is king, and cash is keeping SoFi's performance in line with where they want to be. They can't be missing earnings reports right now because Bitcoin falls 30% and slices their revenue guidance and growth because they went all in on a Bitcoin. That's kind of like what Zillow did. They went all in on iBuying. I never recommended Zillow to you because I knew Open Door was the #1 player in iBuying. So I'm pretty precise on what companies I'm going to recommend you. I'm not saying that these companies aren't good and have potential, but I'm telling you, SoFi is top tier. We have, like, even though SoFi has an amazing product with the one-stop shop, you know, they got like, how many products do they have? Different product variations up to 4,000. The thing about SoFi is they have brought over management from Uber, Tesla, Amazon, Johnson and John. Well, it might not be Johnson and John, but guys, they're recruiting the most elite management in the world because Anthony Noto is bringing these people over, and the girl that's running the marketing team, she might be the best marketer in the world. You guys really need to look up who's running the marketing right now. They got 6 billion views on TikTok for SoFi. So guys, I'm telling you, we have elite management, elite. You have to be very, very confident in your management when you invest big money into these stocks, like really big money. And that's what I really look for. I look for good management teams. And you did not see that in Zillow. You saw people taking gambles in Zillow and they destroyed their company. They lost $300 million. You see that in Robinhood. They were promoting the the trading volume, the coins and stuff, and it came back to bite them. I know it's a boost in revenue at the time and your stock's blowing up, but if you don't maintain what you're gonna do, it can kill your company quarter over quarter. And SoFi is just putting out great numbers, in my opinion. They know they're confident in beating these numbers, and they smacked their numbers today. They smacked them. It wasn't close. They smacked these numbers. What I'm really trying to say is there's really nothing that can stop SoFi now. They're a public company that have already released 2 earnings reports. That first one I told you guys was really good. It was a good earnings report. It's just that, SPAC warrant transactions, 150 million, it really killed them. So there's a lot of good things to, talk about with SoFi, guys. And that's her name. Lauren Stafford Webb is the chief marketing officer. She formerly worked at Infood. I've heard of that company. She's a beast. Like, it's insane. I mean, guys, we are killing it. And I understand there's some companies just like SoFi, like, just because we weren't moving for a while, after the earnings and stuff, you just have to stick with the company if you really believe in it. Like Affirm, they blew up because of that Amazon partnership, but their projections and revenue from that partnership haven't even really accelerated yet. And the company, it tripled from the bottom. They pulled a triple. So people are chasing it. I'm not chasing Affirm. You think I'm going to chase Affirm at 40 billion market cap? You're crazy. I was loading up on SoFi with you guys at 13 billion market cap, maybe 12 billion. I mean, we were low, guys, loading up on that thing. I mean, even now, if you plan on buying in SoFi, the SoFi stock The analysts are saying it's worth 25, but you're going to see some upgrades come in hot. Like these upgrades could come in over 32. Everything could come over 32 is a possibility. The margins were good, revenue, users. They're going to be talking about that user growth too, guys. So I think this stock smokes 30 this year. Like, I mean, I'd love to say this week, but this company, the growth is insane. I mean, they could literally smoke 30. Like, I don't know. I think they're gonna smoke 30. Like, I've been telling everybody I recommend 30 for this year, but that earnings, look at that, guys. We just smoked Robinhood. We just smoked Square. We just smoked PayPal. We just smoked everybody. We are on top right now. People got to chase us as a growth stock right now. We are on top. PayPal is kind of decelerating, kind of. Robinhood, significant deceleration. Square, they'll bounce back. But you guys see what I'm talking about. I mean, I wouldn't even really worry about the price action after hours, guys. There's really nothing that can stop this stock like this year. I'm telling you. Bears, they might have to get warmed up in 1 week from the Q4 because there's nothing stopping this company now. I'm surprised this stock isn't up 20% after hours. I'm very surprised. I think there's some shorts that might be hedging right now and they're really, really battling. I really think, the short interest, the shorts are going to cover their stuff and they're going to, buy up their shares because they're screwed if they try to fricking fight with SoFi now. I mean, you're going to have so much articles, marketing, recommendations, and specifically the upgrades. You're going to have these upgrades coming in hot. These upgrades are going to come in hot. Guys, come on, let's smash that like button. Let's try and get this video to 1,500 likes, please. I know a lot of people can't find it for some reason, but just smash that like button. We need everybody to see this SoFi stock live call and everything. We need people to see this company because I'm telling you, volumes could triple from where we're at right now. Volumes could literally triple. That's how many people could be attracted to this stock. So I'm telling you, wherever the volumes are right now, they could be insane next year. I mean, guys, this stock, so much potential. And I want you to know, CNBC did lie today on their video, or not video, on their they lied when they were on TV. They did a little segment on SoFi, and the lady said with the other guy that SoFi's trading at 31 times sales. And I was like, where are you guys getting that number? Where are you guys getting that number? SoFi's trading at 18x sales. Do you know how big of a difference 18 sales to 31 times sales is? Like, that's what I'm saying. Like, when I put out these videos, like, of calling stuff out, like, I'm not trying to just get views. That's a big lie that CNBC just did on television. This company could go up 40% to get to 30 times sales. So that was blown away when they said that. That was crazy. So 31 to 18 times sales, that's very important. I mean, like right now, a firm is trading at 40 to 45x sales. We're trading 1.5 times less than them. So price to sales is a good valuation for growth stocks. That's a really good valuation to help growth stocks out. Some of the early ones will go over really fast, like 100 times sales. You really want to avoid those. Like I have all of them listed on my computer. I have the most overvalued companies inside of the stock market right now. And those companies right now are Sentinel One. It's like 90 times sales, 90. Snowflake, 100 times sales. That's really bad. Bill.com, 100. Cloudflare, 100. I'm not going to recommend these stocks to you guys at these valuations. These are 4 companies, 100x sales. That, like, where is the upside? The company would have to triple or grow revenues for 3 years to get back to a 20x valuation. It's insane. So let me go through some of these questions. I hope you guys are enjoying the live video today. Plan on going live more. Let me just start right here. Will SoFi pay a dividend in the future? I was actually reading up on what's that company called? Salesforce, because they don't offer a dividend and they're much larger than SoFi. According to that article, SoFi could possibly offer a dividend in the next 6 years. So yes, it most likely will take over 6 years because they are entering the growth stage where they have to reinvest and they won't have the cash flow and EBITDA and stuff to pay dividends. So in my opinion, it could take over 6 years for a dividend to come. But imagine if you're holding this company, you 10x your investment and then you get a 3% dividend. You're going to be loving life 10 years from now. I mean, that's what, being an investor is all about. So the dividend could come in 6 years or more. I actually know a guy at my gymnasium at LA Fitness. He's a multi-millionaire. He's owned stocks for 25 years, and he owns dang it, what's the stock called? I've said this before. He owns Philip Morris, and he has about $4 million, I believe, $3 to $4 million. So he gets like the 5% dividend. So what is that? He makes $200,000 a year doing nothing all day, just straight dividends. And Philip Morris actually like pulled a double because they did good when the market crashed. So he gets 5% dividend on 3 million. He gets 200,000. So that's something to think about. Let's see. I think Q4 growth will be even better because most of the publicity wasn't in Q3. Yeah, we'll cover that real quick. So guys, I talked about this NFL stadium, and some YouTuber called me out saying this guy's recommending that SoFi is going to go up on Super Bowl night. I never said the stock's going up on Super Bowl night. I said the Super Bowl is going to produce downloads. I mean, people will question your IQ when you didn't even say, "Oh, SoFi is going to fly on Super Bowl." I never said that. I said that the Super Bowl is going to bring in massive user growth. I don't even know who the guy was, but he's just milking up these YouTube videos and doesn't even believe in the company. So I saw that video. I was kind of mad. So the NFL stadium, the NFL marketing is working via quote from Anthony Noto. And we only had 30 days of the SoFi stadium for the quarter. It was in the last month. So this next quarter, we're going to really see if the stadium produces great user growth, maybe in the 400,000, maybe. We'll see how 3 months of NFL stadium works compared to one, because I really think it's different from like legacy companies having NFL stadiums like MetLife, FedEx. I don't even know the other ones, but it's because we're a fintech and young people are using this and it's working. It's a product that you can use because the product is all digital. So that's why the stadium's working. And people that say it's not working are not working. It's working. That's why they're paying $20 million to use the stadium as a marketing tool. So it's working. It's lowering customer acquisition costs. So yeah, 3 months of NFL marketing could definitely work. EPS crush estimates. Dividend would be years away. Exactly. Wow. Look at that guy. See that? We have smart people in here. We are in growth mode right now. Boom. I said it. 6 to 7 years. I don't know. Let's go. Upgrade. Yeah, guys. Upgrades are going to be coming in hot. I'm projecting. There's no reason for anybody to come in under 30. I mean, even that one guy who's being a jerk saying SoFi has to prove themselves and put out a $16 price target. If that guy doesn't come over 25, he should get fined or something or lose his license, because every single analyst is over here, the other 5, and he's the only one holding back, just trying to be, a grandpa, safety, whatever. I don't know, just being a grandpa. So I think we come in hot over 32. I think Morgan Stanley could come in over 35. They were really liking the call. They're talking about the bank charter. So just know these analysts are invested. I mean, they're going to push the price target to as far as they can, besides being, manipulating the stock. I don't see why we shouldn't get some $35 upgrades, and somebody throws a 40 in there. Who knows? I don't know. They already have analysts at 30 right now. So, okay. I don't really understand that question. Let's see. I was surprised it was down so low today. Yeah, guys, we had some bad inflation. The market, CNBC, was really running with that inflation data. It was bad. They were talking about bananas, rice beans, and I don't know. They were talking about food. You don't really want to hear that stuff. Gas, housing, rent. I mean, it's bad. Okay, it could take another 6 to 9 months for this inflation to slow down. So be expecting these types of market, fluctuations the day on the inflation data. But honestly, it hasn't been that bad 3 months because we've been meeting the expectations. This time we actually miss. And I'm telling you, shorts were having a field day on SoFi, down 10%. I was like, what the heck? I was actually buying up the dips at like 5% because I thought that was like the bottom, and then it freaking thing tanked to 10. I was like, what the heck is this? So see, even I can't time this market. I thought 5% was good. So inflation data was bad, but a lot of companies paid for it. But understand, we have like so much momentum behind us right now that you're gonna see. You're gonna see it tomorrow. You're gonna see the upgrades. You're gonna see the articles. You're gonna see the push come. I mean, the push is gonna be pretty dang big. I don't see why we can't finish the week, over 25. So that's just my opinion. Holy close your account. So guys, I mean, I've been telling people to do their research on this company. A lot of people seem to do their research. This is a good one. I really like this company, and like I said, they just put themselves in the front of the line. They just passed Robinhood and Square as far as like future, growth for like next year. Like, we're in front line of them, believe it or not. Even though Square is 10 times bigger than us or 5 times bigger than us, we just passed them because our management has us right in line. So, and what else? Oh yeah, we're in front of Square, PayPal, and Robinhood as far as like, confidence in the market. So we have taken the lead. SoFi does not do options trading because they want to have their platform as like a long-term investment. They don't want people gambling like Robinhood and think, what the options have done to Robinhood's platform. It's really killed them. They want to do it in the most safest manner as they possibly can. That's why it's taking some time. Maybe they'll put some like recommendations of how many options you can buy. They're going to put some type of control because they don't want it to turn into a trading frenzy where revenues are just up and down. They don't want that. That's why they're not even worried about options right now, because it can cause a lot of ups and downs in the stock from these meme stock traders, and it can cause a lot of bad headlines when you talk about people losing money, like, Robinhood encouraging people to gamble. SoFi doesn't want that. So I think if they do options trading, they will do it in a really good way. They'll do it in a safe way. Come on, hey guys, we need to smash the like button so this video can get seen by the algorithm. We got to get to 1,500 likes. Some people have been having trouble finding the likes. Let's try and just push this bad boy to 1,500 real quick. Come on, guys, smash that like button. We're gonna need it. More people will be able to do research on SoFi. You might get some more diamond handers in the stock for the long term. Publicity is money, and we need publicity right now. So just find that like button. Some people can't find it. Just find it and smash it. The algorithm loves it. I don't know. Let's see. What else we got? Yeah. Oh, let me see. Somebody said close out the chat, smash the like button. Let's see how to do that. Huh. Never mind. All right, let's see what we got. Yo. Dang, man. The comments are coming in hot. Man, guys, there's a lot of comments. Holy crap. Okay, I'm going to check the institutes. Usually I do this on my video. I'm going to check the institutions just to see if we have any buys coming in today. So let's see real quick. I usually do this in my videos. So you guys are getting the inside scoop. Okay, today is the 10th. All right, guys, we have a holy crap. Okay, we got a big buy order coming in. Creative Planning, 600,000 shares. And we also have Citigroup, 217,000 shares. So that's huge. That is huge. That's 1 million shares almost. All right. Let's see what we got. Do you think the price will be up tomorrow? I think the price will be up this week. I think we go up this week just because that inflation headline has hit the market. People are absorbing it, and we can get past that inflation data, okay? Yeah, PaySafe is kind of like PayPal, in my opinion. I believe PaySafe is doing much better than a lot of these other SPACs that got smacked down to 4, 5, 6, 7, 8 just because of the short positions. I did a video, my last video on PaySafe. If you look at their last earnings report, it was good. They had a great earnings report, just guidance a little soft. But understand, they've invested in so many acquisitions. Management is investing in growth for the future, and that growth will start to play out next year. And I think this could be a growth stock over 20% year over year. That's pretty much like PayPal, but the valuation is low. We're talking 3x to 4x. We're talking 4x sales, 4 times sales on a company with 500 million EBITDA, profitable. Look at the last earnings report. You'll see it was good. It was good. It wasn't great. It was good. It was not like Wish, Root. Like I said, those were really bad. So PaySafe's good. Yeah, we're passing PayPal as far as confidence and growth. You're gonna see a lot of investors in PayPal come out of that stock and move their way to SoFi by the end of the year. There's no reason not to, because SoFi is just getting started. Yeah, I saw the Rivian. It went up to like Rivian. Oh yeah, it did good. I gotta check it. It did good. Yeah, the firm 27 after hour jump. I don't know. I think Meet Kevin really has a lot of power in this company. He has a lot of money from his investors on his channel. I mean, honestly, it could be a couple 100,000 people, because that's one of his bigger investments in his portfolio. So they are running. But guys, we're talking 45 billion market cap. I mean, I know they released some type of news today. Let me see what they said. Let me see. I mean, 28% is huge. The stock's already 300% gain. The company expands Amazon relationship. That just seems like a freaking a milk up FOMO headline. Okay, you already announced the Amazon partnership. Now you're saying expands the Amazon partnership. That's not a freaking headline. That's the same dang thing. And you just freaking got another 10 billion market cap. So that's ridiculous, guys. That's nothing like a bank charter approval. That's just going off of the Amazon partnership. So the stock reacted pretty good to that, but I don't know. I think it's overvalued. Let's see. So guys, somebody said, do I have a position in Open Door? I do not have a position in Open Door because I sold that position and bought SoFi. But I never said to sell Open Door. A lot of people in my Patreon, guys, if you're new to the channel, I mean, I recommend you to sign up for the Patreon. I'm giving other good recommendation buys, and I stuck with that one. I sold it for SoFi, so be sure to sign up for the Patreon if you want to get some good buy recommendations. And I do some call options here and there. I played some call options on SoFi. those might play out really nice by Thursday. We might get some big gains on those. So be sure to take a look at that link. And let's see. All changed after Noto came to SoFi when it was just a small lending company. Yeah, guys, SoFi was nothing a couple of years ago. The management was horrible. They were just doing student loans, and Anthony Noto is really building the culture, and he's proven himself. That was a great earnings. That's what you got to do. All right, let's go. Open Door is a great company. Yeah, I'm still recommending it. I had more confidence inside of SoFi, and I wanted to double down when we were dirt cheap. And yeah, I sold it for a tiny profit. It wasn't even a big profit, but you guys, you can see Open Door. I mean, what are they up after ours? I mean, they're freaking killing it. I told you guys, they are the kings of iBuying. They know what they're doing because they've been doing it their whole life. Zillow's been doing it for 6 months. Let me take a look real quick. I knew it was good, but yeah, holy crap. They're killing it. Net income negative 57 million rather than 144 million negative. Revenue up 90%, destroying it. Let's see. I work for Open Door. Okay, so yeah, I have a pay safe position. I mean, I'm not quadrupling down, I'm just letting the stock recover. My position is, I don't know, $10, $11. I think it's worth a lot more than $10. And I have about $25,000. But for SoFi, I have like 700 times larger position. So I have like 100 and, well, I'm going to have more tomorrow, but I have like 170,000 now. So PaySafe could develop into a 50,000 position if we move into 2025, but I have around 25 grand. It's a good position for me, but SoFi I have like 170 grand or something like that. So I'm like 600 times more confident on SoFi than PaySafe. PaySafe is one I think could just creep up on me when I'm not expecting it, because sports betting and iGaming is untapped market. It's untapped and they're growing revenue. So I have a good position in it. So 25,000, maybe 30,000. Do you think Upstart is in right price to buy? I think Upstart is doing it's a lot better valuation. I mean, guys, we were talking, that stock was $400. It's come down to $250. So it's came down a lot, and they had a good earnings. They just had a little bit of EBITDA problems, but I would probably, if you want to get into Upstart, they're doing really well. I would probably just buy in slowly, but you're getting an 18% pullback just today on that earnings report, and that was they got killed because of that inflation data. So it's decent. It's decent, but I would just recommend you to go with SoFi, to be honest, and pass on a Upstart. Appreciate it. Thank you for subbing. I really appreciate it, guys. Be sure to subscribe to the channel. I mean, I did say once SoFi confirms the bank charter and the stock really moves up a lot, I will broaden the YouTube channel to more and more stocks. I will start to do that. I will start recommending stocks. It's just hard. It's hard for me to do listen, you guys got to listen to this real quick. It's hard for me to do a YouTube video on a stock and have the passion if I don't own it. You see what I'm saying? If I don't own it, I don't really have the passion, because I got to hype the video up and make it sound fun. And if I don't own it, there's YouTubers out there, I'm not going to say any names, but whenever the headline is trending for that stock, they're an expert in that stock out of nowhere. They become an expert. DraftKings, they're an expert. Affirm, they're an expert. Everyone becomes an expert when something starts trending. I can't really do that. I mean, I could say, oh yeah, it's a good buy right now, but I'm not going to, say put 100 grand in it if I don't believe in the management, have done my research on the management. It's just hard. So I'm a little bit different than other people. I know I follow some other YouTubers that I really like, and, some of the guys are really diversified with like 30 to 40 companies. And I don't know, it's just really not my style. Like, if I'm gonna buy something, I want to load up and go all in. I don't want to be capped by 20 other companies holding down my favorite company if it starts running. You know what I'm saying? If I own like SoFi or Tesla, I don't want that thing to be capped because I got these other 30 companies that are holding me down. So I can handle volatility. That's why I like going in heavy on just a specific, amount of companies. I don't like 30, 20, 30, 40 companies. I just never been like that. I don't know. Maybe it's because I'm young, but I don't want to be capped. I don't want my stock to be capped. I want my stock to run if it wants to run, and I don't want I don't want a 3% position in SoFi. I want a big position in SoFi. You see what I'm saying? So nothing wrong with diversification, but I can handle volatility. I don't mind, like today, down 10%. Someone who invests in Amazon, they haven't seen a 10% drop in 10 years. So that's what I'm talking about with these diversification and recommending other stocks. It's hard for me to do that. So let's see what we got. Let's see. Recommend research for the companies. How about Fubo TV? Guys, that was a pretty good earnings report. They got 1 million subscribers, 150% growth. I just think if you look at this Fubo stock, it's just ran up so much the past month. That stock moves like that. The past month it was up. The stock was up 30%, and it just lost all those gains. So there's not a lot of diamond handers in that one yet, but I think Fubo is a great buy. I mean, it only has a market cap of 3.6 billion. These guys are kind of killing it. They could be bigger than Roku in 2-3 years. You just don't know. So I think Fubo's good. And freaking talk about a sell-off. Holy crap. 23%. Just a lot of traders in that one. Good company. It's just it hasn't built the long-term holders yet. You want the long-term holders. Right now, SoFi is in remember I said the loading phase? We're still in the loading phase. It's building up the long-term holders. Once this stock reaches 50, 60, the volatility is going to slow down. It's not going to be, you're not going to see these 10% drops like that, guys. The volatility is going to slow down because you have more people long-term investing. Right now, there's a lot of options traders that got smacked in the morning, or people trying to trade, and everyone loading on puts, hedge, puts. Everyone thinks every single earnings is going down these days. It's about the management and their guidance and the leadership. And that's why we just smoked these puts today. And, I loaded up some short-term calls. I was like, I just did my research. I knew that the growth was going to be there. They weren't going to miss EPS twice in a row without those expenses. And I really thought the user growth was going to be really good. And it was the second level highest all time. So it just takes a lot of research to make moves, ballsy moves. You got to be confident. And a lot of people say you got to have conviction on your stock. That's not, some people have conviction on, listen to this. Some people have 100% conviction right now on stocks that are literally $2, that drop from $20 to $2. People are literally all in on SOS, all in on Metro Mile, Sense, Car Lots, Hippo, Express, Catapult, Romeo Power. Every single stock I just said to you is $3, down from SPAC $10. People are diehard fans on those companies, and they don't even look at the earnings. I look at the earnings, and it's down 64% year over year. I'm like, how are you confident? Why are you recommending that to people? The company is collapsing. That's just 10. I can name another 20, Smile Direct. That company just reported horrible earnings. Horrible. That stock freaking might go to $2. They are not performing. There's no reason to buy it. Even if it's a cheap valuation, the growth isn't there. So there's a lot of them right now, guys. I have a list of 60. It's my list of 60. I call it the do not touch, just monitor and, just see how bad they're doing. And I like to monitor bad companies. Gives me a better understanding of like what not to buy. So having conviction isn't always good. Some people have conviction in absolutely horrible companies. I think the best thing to have conviction in your company is to make sure it's growing. Make sure it's a growing company. 10% growth, 20% growth. Make sure it's a good valuation. That's number 2. You don't want 50, 80, 100, 150 times sales. You want to find companies 10 to 30 times sales or 5 times sales. So revenue growth, that's number 1 for me. Valuation, number 2. 3, management. Make sure you got a good leader that's worked at other companies, has good leadership around him. And those are the 3 to get your conviction. Those are the 3. Revenue growth, valuation, management. Once you check all 3 boxes on those, you can put some big money in some stocks, okay? That is the 3 biggest things you need to have conviction, okay? And guys, I've developed a lot as a stock market investor, okay? I've been investing in the stock market for about 3 years, and I've been smoked. I got smoked a year, 2 years ago when EV just came out. This was back in like March 2020, guys. We're going to be heading into March 2022. So I got smoked 2 years ago chasing EV. That's why you don't see any EV on my channel, because I don't believe in it yet. I don't. I believe in Tesla, I believe in NIO, and I believe in ChargePoint. Any other EVs, I do not trust, okay? So I've learned my lesson. Getting smoked in a certain sector, go through my YouTube channel, you'll see NIO videos. NIO's freaking killing it. It just sucks they're in China. They're a China company. It sucks. The CEO, he's really good. Valuation, pretty good. Growth, excellent. And that's why I recommended it. A lot of bad people were chasing that one, a lot of meme stock chasers and stuff, but I don't mess with EV. I don't believe in EV. I have a list of 20 companies. I have a chart. I have a list of 20 companies, and I just monitor them. I don't recommend them. Listen, watch how fast I can name these stocks because I have them recommended right here. Ready? NIO, Lee, XPV, Tesla, Lucid, Workhorse, Proterra, Lordstown, Nikola, Hyliion, Solo, Green Power Motor, Fisker, FUV, Arrival, GoEV, Line Electric. I have all of them listed. I watch them all day, and I don't see anything. I think Lucid is one of the biggest bubbles right now. It's $80 billion. I wouldn't touch any of those. Okay. Tesla, NIO, Li Auto. Those are the real players. It just sucks the other 2 are in China. All these other companies are just speculation right now, guys. It's too damn early. It's way too early. It's Lucid. I mean, they haven't even sold a car. They have pre-orders, but it's high risk. So I'm 26. Okay. I'm 26 years old. Yeah, I like NIO. NIO's a good company. Just freaking China. China sucks. Let me see. Let's see what we got. This guy said Smile Direct is good. Just had a bad slip up. I looked at the company. I think it's a good company, but they're not in a good spot right now. 20% growth. Yeah, see? You got good growth, but I mean, you talk about that quarter. Revenue down 18%. So that's not good. Okay, let's see. Let's see what we got. Kyle, do you think they will have another offering? Anthony Noto. Somebody made an Anthony Noto YouTube account. Hey guys, come on. Let's get this video past 1,500 likes. Come on, push through real quick. I know it's tough to find the like button. Come on, just smash the like button, please. Let's push this thing to 1,500. We need it for the algorithm. Everyone's going to watch this video tomorrow that is at work or something and review the earnings call. This will make people do more research on SoFi. So just blast it. Do what you can. Okay, he said, Kyle, do you think they will have another offering? How much cash will they have? So they covered this in the call. I do recall this. I think they're up to 3.6 billion or something like that. So they do not need to do an offering right now. They might not need to do an offering till like 2023. So they're good. They are 10 out of 10 in cash on the balance sheet. Yeah, I know what Sense is. Yeah, partnership coming, global leader. That's the thing. I don't like those because a lot of people know it's coming, and stuff like that. That's the thing I like about bank charter is so unpredictable. Like I love it. Like it's not like a Neo day. It's like nobody knows when it could happen, and that's why a lot of traders aren't gonna trade that one because they have to wait, and it could be a long time. So let's see what we got. Lucid, yeah. Jesus, that company is scary. Guys, Lucid whole $70 billion. That's 400 times larger than SoFi right now. 400% larger company than SoFi. Scary. People don't understand there's like 2 billion shares outstanding. SoFi has like 700 million. So that $40 price tag is like moving up the market cap like crazy. Eight point a good SPAC. Go look at the earnings report. They freaking killed it. They killed it. They are investing in their company. The CEO founded the company. Remember? Management. Watch this real quick. Watch this with 8 Point real quick. You ready? Listen to this. 8 Point. CEO founded the company. He made it through the financial crisis. He's still here. He's a public company now. Boom. Management. Strong. He created the company. Growth. We're talking 40%. They are killing it. That's 40%. Cloudflare grows at 50%. We're right behind them. They're the number one cloud company in the world right now. Cloudflare, ready? Valuation. This is my third one. Valuation. Cloudflare trades at 106 times sales. 8 Point trades at 8 times sales. Give them a little bit of time to put their cash to work and more investors learn about the company. It could be a 10x play. It's a good company. It's a little bit older. It's like 20 years old. The growth is there. 40%. I mean, that's ridiculous at that valuation. Cloudflare trades at 50% growth, 100 times sales. We're 40% growth, 8 times sales. CEO, management, valuation, growth. Boom. Checklist. Boom. All three lists are checklists. AMC is a joke. I would not buy AMC. They had a bad 3 years prior to last year. 3 years ago, the company is not doing good. Thoughts on Palantir? The growth is there. It's a good growth stock. It's good. Valuation is a little high. Even though they reported a good earnings, valuation was a little bit high. It's just expensive. It's an expensive stock. I think it trades at 40 times sales, maybe 35. It's just a little expensive, and that's why investors, I guess there wasn't enough growth to fit the valuation. So it's good. It's just a little bit high right now. It's still a good company. I believe it should have went up a little bit high, but it's a good company. They had that massive, what was it, the Army deal or military deal was like $1 billion. That's next year. So, yep. Look, somebody said Palantir overpriced. No mention of bank charter. When do you see ChargePoint making an impact? I think ChargePoint, out of the 5 EV charging stations, they're number one. Little bit expensive now. Their market cap is like $8 billion, so it's getting a little bit expensive, but analysts think it's worth more. They do $235 million in revenue. I know that off the top of my head. It's good revenue. I mean, it could get crazy like Cloudflare. It's a good company. That was me with Mary Jane stocks, lost 20K. Exactly. Same thing. Speculation, EV. It's not there. Marijuana isn't, verified yet. It's just some sectors are speculation. Rivian, I don't know. It could be in the same boat as Lucid. Just a couple pre-orders. Yeah, I mean, somebody's saying Lucid is going to be huge, but Lucid is the second biggest car company in the world right now. See what I'm saying? It's already huge. It's massive. Oh my God. J Deem. He cracks me up. He said, "Who took the SoFi Lottos with your boy?" Guys, I bought those weekly call options. Godly, I got those things cheap. Listen to me. Sometimes I will force you to buy some call options. I recommend you to sign up for the Patreon. I bought some call options for SoFi that were like 30 cents. If SoFi rips tomorrow, those are going to pull a 10x. 10x. You guys want to know how much money I invested? Here, let me come back to this. Can I pin this? Let me come back. Guess how much money I invested? Somebody just take a guess. It's not that much, but it can make a lot of money. Oh, J Deem's still in the chat. Oh man, I didn't know you were in the chat. What's up? Yo, me and J Deem actually brought SoFi to my attention 7 months ago. I don't freaking know. He started talking about it after it merged, like, hey, it's gonna be a good one. And me and him just built up confidence on this one after researching it. So he actually brought SoFi. I knew what SoFi was, but he brought SoFi to my attention, like to do the research. And I just went crazy with it. I created a whole freaking channel about SoFi. Talk about FOMO. So yeah, you guys know me and JDM are real cool. He likes JDM likes Tesla, Airbnb. Those are great companies. SoFi. And he also likes Palantir. And then just the one little company that took a hit is the Square. He really likes Square, so those are his top 5. Okay, how much? Here we go. This is funny. We got 5K, $69, 20K, 200,000. Are you freaking out of your mind? Who the heck put 200,000? 5K. Oh my God, you guys are out of your mind. Guys, come on. I'm not a gambler. I didn't believe in SoFi freaking that much. That's freaking my life. That would be my life savings. I put $3,000 in. So the 5K guys were right. We have a 5K, a 5K, and whoever put 20K, you guys are out of your mind. Play weekly 20Ks. You guys freaking rich. So yeah, I put in 20K. Or 2K, or 3K. Sorry, I put in 3K. Those are going to slap though. Yeah, you guys are crazy. You guys must be, some of you people are rich in here. We do have some rich investors in this YouTube channel. Some people have like 10,000 on SoFi. Yeah, I put in 3K. I put in 3K. So you guys are freaking out of your minds. You guys are gamblers. 20,000, 20,000, 20,000. Come on now. I'm freaking an average Joe almost. Yeah, you guys are talking about me, Kevin. Nah, I put in $3,000. Yeah, I mean, this guy said only 3K. God, you guys are funny. Yeah, man. I think, like I said, I think it could run. What's tomorrow? Thursday. I think it could run tomorrow. I think SoFi can run tomorrow. I'm excited. I really think there's nothing to stop this stock right now. But yeah, talking about stock, I did buy a lot of stock. I own 6,000 shares. I do own 6,000 shares, so that's pretty good. I mean, if SoFi freaking doubles from here, we're talking. Look, if SoFi pulls a double from here, guys, I just want to show you. 6,000. If SoFi doubles from here, I'll have about $280,000. That's a lot of money. So that's a lot of money. I mean, that's all I had to buy. I still have a lot of cash. I have cash. I don't blow, I don't go crazy, but yeah, I got 6,000 shares. Yep, exactly. Yeah, I'm pretty much trying to cover the fundamentals, make sure people aren't buying overvalued or buying overvalued companies, and J Deem can give you like the week-to-week, day-to-day price action of when to buy in and get in. So he's like a technical trader, and I'm more of a just make sure we're in line, getting a good valuation, and making sure there's a good valuation. That's the most important thing. And seeing the upside. I can also give you guys upside price targets. I'm pretty good with price targets within 6 months to a year. I can't really say I'm good at 1 month price targets, because that's kind of, what I'm saying, that's a little. Let's see what we got. Thank you, man. Some people, I have 6,000 shares. Holy crap, that's a lot. 3,000 shares, man. You guys got money, man. 6,000. I have 120,000 shares. Who the heck are you on my YouTube channel? Do you freaking own 50 gas stations? Who are you? 120,000 shares. Holy crap. My goal is 10K. Yeah, that's a really good goal. Some of you guys are rich. I swear to God. J-Deem has 1 million. He is a whale. 40,000 shares. It's a paper account. That's funny. Let's see. 3,000 shares. Everybody's got like 3,000 shares. You guys are going hard. 500 shares. Very solid. Started with 1K. 100,000 shares. 30K. Man, some of you guys might be trolling me right now, man. Some of you guys might be trolling me. You guys are all not freaking balling like that. Yeah, you guys are starting to troll now. Come on now. You guys are funny. Yeah, man, these people got money, man. You guys got money. All right, let's have a little fun. Let's have a little fun. Let's have a little fun. Price target SOFI Technologies New Year's 2022. Price target New Year's. That is 6 weeks from now, right? 7 weeks. 2022 New Year's party time. 30, 45, 80, 45, 32, 35, 30, 40, 30, 69, 30. We don't have anybody coming at 29. 35, 50, 50, 30, 50, 50. Okay. Okay. Nobody's really over 60. Okay. So guys, according to hundreds of people, we're looking like an average of, I don't know, 30 to 50, 40. Everybody's confident we're going to be right around 30 to 50. I mean, I've slipped up my price target a couple times. I mean, with this earnings report, now that I can really look at it, feel it out, I think we can get 1 week. 1 week we could get a little bit of FOMO, a little bit of FOMO. I'm going to go with 35. I think $35 is reasonable. The FOMO could happen Monday. The FOMO could be next week. We're going to get some crazy the upgrades. Remember, guys, I keep telling you the upgrades are coming in. The upgrades are coming in. Upgrades 25, 27. Yeah, the upgrades will get us there. If all of these upgrades come in 30 to 35, we're at 23 right now. We could jump like $27 to $28 this week. You see what I'm saying? If the upgrades come in over 35, remember, guys, price targets, when you're not like a Microsoft, Amazon, or a Google, what I've noticed for price targets for these growth stocks, they're always going to come in higher, a lot higher, and the stock will never really get to those price targets. It'll like we're here, price targets here. This is what's going to happen. Watch. We're here at 23, price targets at 25. They'll upgrade at 32. We'll be here. We'll never really hold past here. It's just the upgrades go like this. You never really touch the upgrade. You always stay in line as a growth stock. So if they come in hot over 35, we could break $27, $28 this week. It is possible. I think tomorrow's going to be a tough day for any bears. I think tomorrow could be a tough day, a really tough day. Like, There could be some cover. Remember, guys, short interest on SoFi is right around 9%. That's pretty high. If you look at stocks like Microsoft and all them high quality, they're like 3%. So we're at 9% short interest on a mega cap or large cap. We are pretty high short interest. They have nothing to keep the stock down like at these levels. They are going to have to buy back their shares cover. Yeah, guys, we're looking good, okay? We're looking really good. Yeah, I'm telling you. Negatives about that double miss, with that earnings expenses, that's out of the way. Warrants out of the oh god, I just forgot. Warrants are gone. So look, one-time charges, expenses, lifted off your shoulders. Warrants, gone. Smashed earnings, gone. User growth, gone. Customer acquisition, down. We have one thing over our shoulders. It's the bank charter. If we can get that off of our shoulders, I don't know. We're just unstoppable. We're going to be unstoppable next year, guys. It's coming. It's coming. We are the largest company on the list right now. We are the biggest company. Lending Club got approved for a bank charter, and they're like 7 times smaller company than us. We are looking good. We are looking really good, guys. I promise you that. So I don't see no reason why we can't rally this week and next week. Next week could be crazy. I'm telling you. Inflation data, remember, inflation data is getting absorbed. It's getting absorbed. Lending Club went from 25 to 40 real quick. Remember, guys, Lending Club was running the next day after the earnings. It did go up 20%, but it ran hard the next day. So according to you guys, we think we're coming in 30 to 45 this year. So some people are bullish as crap. And guys, I'm not just saying, trying to milk these bank charter views. I think the bank charter is getting approved December because when SoFi put out that investor presentation in November of 2020, whatever, they put it out with the all right, JD, I'm gonna holler at you later. Good work today. The bank charter had data that's saying it was going to get approved today or December this year, 2021. It had it on the thing. So if it's not in November, it's December because the bank charter is going to work in this year. So I see December. There's no reason why not. Appreciate it. Yeah. Big dogs are going to double down now. A lot of big time investors understand that they won't really invest aggressively until they have confidence and see multiple earnings reports. So some big buys could be coming in, guys. Some big buys could be coming in. All right, y'all guys. I'm heading out. I got to get some food. I'm going to probably grab some drinks with the boys. It was a great day today. Great day. Understand you have a lot of upside the next 3 months heading into Q4. You have a lot of upside. Be ready for some upgrades from analysts. Those should be coming in hot, really hot. I'm going to go home. I'm going to work on some what am I going to work on? I'm going to review the earnings call in my studio, and I'm going to do more deep dives. I'm going to just listen to the earnings call more, research little things that we missed. And it's been a great day. You guys should celebrate. You guys should really celebrate. This is a real company that could be headed into it could be heading into top 100 territory, as far as market size. I think SoFi right now, I'll tell you right now, SoFi in America, out of the 570 companies for America, we are ranked. We're not even in the top 160. We're ranked 177th. So guys, we're not even in the top 150 for tech companies right now. Massive upside, massive upside. So until we get into that top 20, I'm going to keep being bullish for you guys. And I really enjoyed this video for you. And I'll be keeping you updated. I'm going to work on opening up to more companies on my channel. I'm not going to be a YouTube pumper. I don't want to be a YouTube pumper. I'm not really worried about getting YouTube views because I know I can make money investing, buying high quality companies. I don't need to make money off of YouTube to become successful. I don't need to make $1 million off of clickbait and stuff like that. I don't need it. I can become a multimillionaire on my own without chasing Dogecoin and Shiba. I don't need the views at all. So I'm not going to do it. I don't need to do it. And I'm going to stay true to myself and what I believe in. And I'm not going to be a meme stock pumper. So hope you guys had a great day. I know it was very, very stomach wrenching. I know it hurt. It did hurt me a little bit. Once I saw it drop under 5%, I was like, oh my God, what the hell is going on? But you guys diamond hand it. And this is the outcome you get from good management. You guys get a blowout freaking earnings from a real company disrupting the world. Disrupting the world. They have China, Mexico, LATAM. They have all of these different areas that we're going to see getting disrupted 3 to 5 years from now. They just got to lay the groundwork in SoFi right now. So once again, guys, I really hope you enjoyed the video. I will see you guys on the flip side, and have a great day, okay? Later.